Texas has no inheritance tax and no estate tax. The legislature repealed the inheritance tax back in 2015. In November 2025, voters went further. They wrote the ban into the state constitution. Article VIII, Section 26 now prohibits a death tax outright. A future legislature cannot simply pass one again. But here is what that ban does not do. It does not touch federal law. For 2026, the federal basic exclusion amount is $15 million per person. Above that, the rate reaches 40%. Most Texas estates own nothing at all, which means the questions that matter are somewhere else. The first one is basis. Texas is a community property state. Under Section 1014, both halves of community property receive a new basis when the first spouse dies. Not only the half that belonged to the decedent. That is a result most states cannot offer. The second question is what never receives a step up. A traditional retirement account is income in respect of a decedent. Under Section 691, it receives no new basis at all. The beneficiary pays ordinary income tax as distributions come out. Families hear no inheritance tax and assume the account is free. It is not. The third question is other states. Inheritance tax follows the domicile of the person who died. It also follows the location of real property. It does not follow where the heir happens to live. 5 states still tax beneficiaries. A Texas heir named in a Pennsylvania will owe Pennsylvania tax. One more item costs families quietly. Portability requires filing Form 706. That is true even when the estate owes nothing. Skip the return, and the unused exclusion of the first spouse can be lost. No state tax does not mean no tax. Tax expert today.